Now on to the final trade of the day with Mike Patton, head trader at Funder Trading. Can't wait to see what you have for us today, Mike.
All right, what I have for you is a stock that everyone's familiar with, CVS. Of course, the symbol is CVS. And obviously, this company, we've all been to a CVS store before. The company has had some pretty rocky periods over the last several years. It's definitely seen a significant decline in stock price since 2022, at least. But I do think right now it's in the position for a potential rebound. As we're speaking, the stock's trading somewhere around $61 a share, thereabouts. And I am seeing a lot of increase in institutional ownership of the stock. Institutions seem to be very keen about buying more shares of the stock. It's actually in more top 10 lists as well. And looking at the current price point, based on its current metrics, its cash flow, its earnings, looks like it's at a pretty good value. In fact, it's probably at one of the lowest values that we, or the best values, I should say, that we've seen in the last 5 years. So upside potential seems pretty good. So let's talk about that. Basically, I think that this stock could definitely be up to about $80 a share, $79 at least in the next 6 months or so. However, to the downside, at this point, the stock seems to be trading way undervalued, but nevertheless, if it were to trade down to somewhere in the neighborhood of $57, $56 a share, at that point, I would consider it a good idea to exit. But as long as it stays above, let's say 56, I think we're in a really good position. Also, the last earnings came out better than expected. They came in with an earnings per share of $2.25. The estimate was only $1.71. So they really crushed earnings.
What are you watching in the stock market this week?
Sure. I mean, we definitely should keep an eye on what's going to happen with the spending bill. I do think that that's going to have the largest impact. We've already seen certain stocks like First Solar and other solar stocks. They've moved dramatically downwards due to changes that were put in place at the last minute with regard to subsidies, with regard to, for solar. I was definitely keep an eye on any green energy stocks because they're going to likely see the most volatility with the most potential for downside risk.
That is good to know. Thank you, Mike.
Absolutely.